Mergers and acquisitions is a hot topic in Treasury technology. There's been a recent announcement about Ion acquiring Reval. Reval, a key leading SaaS software as a service provider. There's been an announcement. I guess it hasn't consummated, but before we start that, Justin, why don't you just explain your role at Reval?
Sure. Thanks, Greg. So I'm Chief Marketing Officer and Head of Strategy for Reval. So what that means is all of the glorious grandeur that you see here for events, our PR communications, our website, and then all of our strategic relationships as well. So we have a wide network of partnerships, though all the strategic alliances will roll up to me as well. So yeah, meeting with partners, meeting with clients, meeting with many of the consultants here to hear what's going on in the space from their perspective. So it's been a good session so far.
Excellent. So when we think about how an organization, a technology firm, a treasury technology firm advances through the cycles from starting, they may have some kind of equity provided by the owner, maybe they get some venture capital and they move as they grow. The needs may change over time. What the organization needs may differ. I would be interested to hear your comment about where Reval is in this status, in this situation.
Sure.
How have your needs changed as you grow? Not every funding mechanism is right for each size organization. So
yeah, if you look at the history of Reval, so Reval's been around for 17 years now, so Jiro Kochi, our CEO and co-founder, unfortunately couldn't be here, but sends his regards. He started Reval back in 2000, and from that, he started with a friends and family round, and that's essentially where you've got a really good idea, and you've gone around to people that you trust, and that trust you, and say, here's my business case, here's where I think we can go. And you get your first investment, it's your seed generally. And then through that, you build the product, and you continue to advance the product, you get your first 1 or 2 clients, and then you get to a place where you say, okay, either I can now grow at an organic rate, just by each new client coming on, or I can accelerate growth and find outside money. And Jiro and the board at that time decided that it made sense to bring on outside money. So Reval was from, I guess, about 2001 up through, well, still currently, venture capital backed, or had some external backer in the back that allowed us to broaden internationally or go into new segments. In 2010, really 11, we acquired a company called EcoFinance because at that point we said, all right, we've got global scale from a risk perspective and from a regulatory perspective, but our clients wanted the full all-in-one platform, so we went out and we raised some capital from our existing investors and acquired a company called EcoFinance to get into the cash, liquidity, and payment space. So yeah, funding, that type of funding has always been part of the Reval story. The way that we got to where we are today with the recently announced acquisition by Ion of Reval is we were looking for that next phase. And through that, we initially were looking at investments, potential investors that could come in and give us that next investment to allow us to grow to the next level. And with that was going to come the ability to acquire new companies. And so what we had here is a strategic came to us and they said, we really like your product. We think SaaS as a centerpiece for our portfolio makes sense. You seem to have a good structure and brand and management team, so that'll be incorporated. And for us, we've got this great balance sheet now. I mean, it's a super stable company, portfolio of products in the treasury space, but it gives us a real stable balance sheet that we can now leverage to go and grow either organically or acquisitively.
So taking a step back after the friends and family to the VC, they're putting money in. They have a life cycle expectations. It fits well. It's like you get some. When you're a teenager, you got some responsibility, but you're not responsible for everything. Where does that work well, and where do you reach limitations where it's time to move out, on your own?
Well, VC tends to be a growth play. And what they'll do is VC is venture capital. They'll be a growth play, and they'll make a number of different investments. They'll have different tranches and different portfolios. And they'll essentially have a portfolio that's focused on a certain growth profile for a certain period of time. And so Reval was very much in line with, and they make a number of bets, and out of 10 bets, 2 will be home runs, maybe 1 will be a home run, and the others will be singles or doubles. But the intent is to spread it out, invest in growth, and see which management team can deliver. And so for Reval, back in the early 2000s, that was a good model that carried us all the way through to where we are today. The downside of, I don't know if I call it a downside or not, is the unknown, the uncertainty of what's to happen when that company is looking to find their eventual home. We were fortunate enough to find a very stable company focused on really the treasury and risk space, and they've got a wonderful portfolio of products, whether it be, Wall Street Suite, whether it be City Financial, whether it be IT2, Treasury. I mean, these are amazing brands on their own, and now we're going to be part of this brand portfolio. So we were confident not only in the balance sheet for these individuals, for the Ion, but also in the portfolio of products and the critical mass that we bring to market. So that's really what we're most excited about as a management team and as a product company.
So was Reval one of those home runs, or a single or a double in their portfolio?
I would say a home run. Yeah, I would say a home run
That's a good answer. Yeah.
Yeah, I know. I mean, if you look at their weighted basis from day one, yeah, it's been a good run for them.
So during that growth phase, when you have one client, you had another one, 100% growth, very huge elements of growth. And now you have 700 clients globally. You're not going to be adding another 700 clients each year. There's just no way you can support that type of growth at that level. And so the expectations change over time, right? The return that a VC is looking for, a venture capitalist is looking for, is a different horizon than perhaps a long-term portfolio investor. So you mentioned you're excited about this acquisition by Ion, which has not closed yet.
It's not closed yet. So we've entered into a definitive agreement to be acquired.
Yeah.
But in the fourth quarter, we'll be closing the deal.
Okay. So so within the next couple months, that deal should close. Yeah. And you'll have a new home and a new play. Now you mentioned the portfolio, so I guess one of the questions I would have as a corporate who's, let's say, someone who has IT2 or someone who's a Reval customer, what will this mean to me? If I'm Reval, is this going to cause any kind of dilution in focus on Reval? Does this mean there's going to be more attention paid to other ones? How does this play out for Reval? And then, if you can comment on others, because it hasn't closed, what this would look like as far as a portfolio of products.
Sure. Well, I mean, for the market, what it means is whether you're, a uber sophisticated organization that has just a global profile, that has, needs that might be highly configured, we've got a solution that's right for you with the Wall Street Suite. All the way through the spectrum of maturity to, if you're a company that's getting off of spreadsheets or just moving off of a banking system, we've got a solution for you. So it allows us, whether it be regional, whether it be the functional profile and requirements, whether it be the cost, we've got something that can meet, or whether it be hosting. Some clients in certain regions of the world still prefer to have an installed solution versus a SaaS solution. So it allows us to run the gamut of needs and levels of sophistication. From a client base perspective, we will still continue to invest in the Reval application. We've got 650 plus clients that wake up every morning that leverage our software and requirements, and do 2 releases a year to make sure that we meet the needs of the changing dynamic environment that we all work in. So that will continue. What I don't think that the market does know is, and just I think most of it's due to lack of communication, is Ion has been investing aggressively over the last over the prior years on the products. I mean, if you look, I just met with the one of the CTO last week, and what he was showing me from a user experience, and these are established brands, but great products. So they've been investing really heavily in the product suite over the last 4 or 5 years since the acquisition. So I think from my perspective, what's exciting from a marketer's perspective is I now get to communicate all of this to the marketplace and get to bring, open the channels a bit more than they had been in the past.
Yeah, it seemed, I think in the market there was a lot of noise after the initial acquisition of some of those other brands. There was a little bit of a lull in terms of focus, attention to the market, both in terms of staff and other areas. And then there's kind of getting back into the market of the last couple of years, more investing in those, trying to restart that. So what do you think this means for the core and choice offerings that you have, where you expanded, I'll call it down market, in terms of less complex risk companies. You built the cash element on top of that with EcoFinance. and then you move to a more pre-configured model to be able to move
Sure.
downstream into the cash and risk. Is that going to make it harder for some of those other products to survive, or is it you're still working on what the strategy will be?
I mean, at the end of the day, we're not closed yet, so we still are working on what the strategy will be. But if you look at Reval's strategy historically, it was we were very much risk and hedge accounting focused, and up until 2005-06, that was really our niche market. And then we expanded on that. We added new asset classes and expanded a bit, and then we decided that, all right, we're going after these large corporations with complex needs, global needs, regulatory requirements. Well, as we build out the cash liquidity payments and integrate it, we're going to go after those clients. So from about 2011 post-acquisition close to last year, in April last year, we were really focused on the upper end of the market, making sure that we could meet the sophisticated needs of the global treasury requirements that we had that we're servicing from the risk side. And after doing that and delivering on that and being quite successful in that, we said, all right, now let's see if we can scale this down market. And it was more functionally. We did pare back some of the functionalities to make it a little bit easier to use and less intimidating. But at the end of the day, it's still all one platform. So we were a lot of it was branding to educate the market that, at the end of the day, we are servicing Treasury's needs, whether you're a small corporate that's coming off of bank or spreadsheets, or a large in our historic market that we had worked with. So that was our strategy. Now the question of whether core or choice will continue. I'll be sitting down with Jiro and working through the strategy and with the rest of the team over at Ion to see what are the strengths of each of the product lines that they've got and where they fit appropriately on the curve, and then how do we make sure that we invest in them to meet the market's needs. So that's in the months to come.
Yeah, that'll be interesting to hear. I think one of the elements, you hear that phrase, nature pours a vacuum, and as you move through this, I would encourage you to keep the market informed as you're going through that thought process. What are you doing with each product? How's that going? Because silence can be deadly.
Sure.
It's like people don't know what's going on, therefore speculation can run rampant. But it's kind of interesting. I think from the press release we gathered that sort of like the Reval management team would take over all the products except Wall Street Suite. It sounded like you would be running or coordinating. Is that an accurate depiction?
No, just to be clear, so that as I mentioned, they've invested really heavily over the years in product, and they've got very aligned, integrated product support, professional services to make sure that those clients are continue to be delivered. And what will be Jiro, a co-chair, co-founder, CEO, will be sitting on top of a subset. So the IT2 and the City Financials, Treasury, these great assets plus Reval will be part of this Treasury portfolio that I'm referring to. What I think is different for those people that are using perhaps some of those other products is the marketing and the customer success management and the sales and the partnerships that we've really nurtured and invested in over the past 17 years will now be cascaded across the other brands to make sure that they benefit from some of the strengths that we bring from a management perspective to the table.
So perhaps some of your data as a service where you incorporate data into your platform, perhaps we should look at maybe that flows into other systems, or your connections with FX trading and the use of some of the web services may fall into that. I know you don't need to answer that now, but I mean, just that sparks some of those thoughts.
Well, what was, I think, underlying some of the comments that you just made, so in addition to, taking some of the data as a service and some of the relationships that we've developed and invested in, we're also looking, there's some great things that they're doing on the mobile front across the portfolio. There's elements that we'll hopefully be bringing into the Reval application and offering as well. We have joint clients. We've got a number of clients that have historically been using one of the Treasury platforms at Ion, but using Reval for hedge accounting and risk, so there's opportunities there. There are other clients who are falling under some of the regulatory changes that are being impacted in Europe and Australia with IFRS 9 that we've been investing very heavily in, and we'll look to leverage against a side by side with some of the products that are currently being offered in that portfolio. So while I talk about some of the vertical product elements, there's going to be a lot of sharing and a lot of opportunity to scale across, given the strengths of each of those individual products.
Well, I wish you the best on this acquisition whenever it closes, and
Thanks,
hopefully
Craig.
we can stay in touch. I want to thank everybody for coming. I want to thank you, Justin,
Thank
for
you, Craig. Thanks
sharing
for having me.
information. Appreciate it.
Thank you.